of Texas Energy Symposium, November 14th, 2023. I'm Carrie King, research scientist and assistant director of the Energy Institute here at University of Texas at Austin. And before I introduce today's guest, I'll point out the last talk of the semester, which will be in 2 weeks. We're going to have a double dip of CEOs, one today and one the final session. So we're going to have a conversation with Clay Sell, who is the CEO of X Energy. So him and I are just going to have a conversation about redefining nuclear energy. X Energy is developing a new design of small modular nuclear reactor. But today, it's my pleasure to introduce our speaker for today, Dan Erhardt. He's the CEO of Arcus Power Group, a leading SaaS or software as a service company in the energy sector with over 15 years of experience in the energy industry. Arcus Power is innovating North American electricity markets as the sector democratizes. I think I'll discuss some of this, and drives $20 billion in global power system efficiencies. Dan's known for his execution skills and deep curiosity. It's the conversations I've had with him. He is deeply curious, and the topic of artificial intelligence today, well, I think explore some of that. He envisions a future where energy intelligence transforms industry, fostering a more sustainable, efficient, and equitable energy landscape. So it's a little background on Dan, as the CEO of Arcus Power. He unveils the trend, the abstract of the day of his talk. We'll talk about unveiling the transformative potential of AI in short-term power trading, meaning electricity, spotlighting its dual role as a catalyst for efficiency and a subject for regulatory scrutiny. So how do we kind of push the needle and also trade off with regulatory scrutiny of what's going on in the electricity markets? Artificial intelligence and machine learning significantly influence the market by improving forecasting accuracy and operational efficiency, thus providing economic advantages, both producers and consumers. These technologies are not only pivotal in navigating market dynamics, but also crucial in identifying and mitigating non-compliance and market manipulation in real time to reinforce market integrity and transparency. So, without further introduction, I will now let's give Dan Erhardt a warm welcome from the University of Texas.
Thank you. Good afternoon. It's really nice to be here, everybody. My most recent talk was last week. I had the opportunity to speak in the Canadian Rockies in a Decentralized Energy Canada conference, and we talked about the forest fires that happened in Canada last year, and we had 18 million hectares of terrestrial forest went up in smoke, and it emitted what I think 0.3 gigaton of CO2 and burned 18 million hectares of forest, which is a lot. It's record forest fire activity for a country, and 0.3 gigatons of CO2 is also a lot. It's probably equivalent to what we emit from all transportation sector in Canada in the course of a year. So, but when you look at it in terms of energy inefficiencies globally, and you just look at the difference between global supply and consumption, the inefficiencies equates to about 4 gigatons of CO2 emitted into the atmosphere. That's 257 million hectares of terrestrial forest up in smoke, roughly 3.5 times the state of Texas. And if you just take a cost of 15 cents a kilowatt, it equates to $500 billion in cost annually. So the point is, energy inefficiency has an enormous cost on the environment and to consumers and people in the energy market. And we're going to focus on that today. As the founder of Arcus Power, I see 27 deregulated energy markets globally where this problem set exists, and that there's a way that we can address it, even in the work that we're doing here today locally, and how all of this cascades up and is part of the global solution to solving these inefficiencies. Today's talk is going to focus on, just for context, the economy and then the impacts of artificial intelligence on energy markets. But I'm going to just kind of go back and give a little bit of a history lesson on AI, and for people who are gaining some level of comfort around it, familiarity. Really, it's nothing new. We can go right back to like 1950 to Alan Turing and Colossus, and we crack the Nazi code and we win the war. And that is really like one of the earliest beginnings in AI technologies. And then over a 40-year span, there was a lot of contributions to the energy industry around smart grid technologies, demand response, neural network models that are being used today in many different applications. But what really happened with innovation and technology took place in the last like 20 years. You had microprocessing capabilities vastly improve and enable the ability to continue to perform these complex algorithms and contribute to the overall power of AI in energy markets. Then you also had the additional, AWS and cloud comes along roughly 10, 15 years ago. And this is another piece of technology that leads to the acceleration of innovation and the utilization of AI in energy markets. Because what you have now is an environment where, through the use of cloud architecture, market participants, utilities, large industrial producers, manufacturers can access data readily, run through network models and processing, and quickly participate and make decisions in energy markets. And now today, you see, well, AI has become mainstream. You can't go anywhere and not talk about ChatGPT, the use of large language models, and it's mainstream. So the technologies that we're adding to support AI development is essentially Moore's law at work here, and the acceleration of the rate of innovation is becoming ever greater. So looking at the digitization of grids now, the utilization of virtual power plants, and the ongoing development of microgrids, the future is really bright for these systems because the technology supporting its interactions with the system operators is there to make sure things run as they should. So, and just for context today, when you look at industry examples, the AI learning type and applications, we're seeing it utilized in price and load forecasting right now. Leverages long short-term memory models and recurrent neural networks, and we're seeing it used by utilities and traders who are looking to make profit decisions around it all the time. You're seeing it in load balancing, and they're using heuristics and reinforcement learning, and it's playing a role in demand response and grid management, and supporting the evolution of virtual power plants. And then in more complicated applications, you see it in reserve market auctions. A reserve market auction is not dissimilar to what high frequency trading was in the early 2000s, where you have a market that is building its supply stack where price and quantity pair are being bid into the market, and then the last pair is actually visible by that participant. So the game is, at the end of the market, when the window closes, if your price quantity pair is the last one submitted, you can look to seek to optimize your portfolio. So the algorithm at work and the speed at which that algorithm is deployed is vital to optimizing your performance in the market. So all of these things are happening right now, today. This is the state of the market as we know it. So now that everybody has some familiarity, and is generally, I think, hopefully comfortable with how AI is being used today. It's being used by traders. It has a deep history, and that there's a lot of technology at work supporting its evolution. I think we can just move on to talk about the economy, and for context, why energy efficiency and why AI is important in an economic sense. So this is no surprise to most people. It's not a wow slide, but India, China, the United States, the biggest economies in the world, have the highest energy consumption per capita, and they yield the highest GDP. So it's also no surprise that those with access to low energy capacity are on the struggle bus, and Haiti, Afghanistan, these countries that do not have access to generation capacity also have low economic output. So what's important then is to note that if you can add generation capacity to support a region, you can improve the GDP in those markets. Today, what we're seeing right now and in the United States, the IRA is a great example of that, where we're supporting the addition of new renewable generation to support the demands on the system, and it's a direct investment from government to support it, and it will directly lead to growth in the gross domestic product. So the importance of this is because right now we need to add more generation capacity to the system as a whole, and we need it because we have rising demand, right? Like, today, we are consuming globally somewhere around 28,000 terawatt hours of electricity. And a conservative estimates, just looking more at the blue-green lines, by 2030, it's going to increase up to about 39,000, 40,000 terawatt hours. And in a worst case scenario, up to 60,000 terawatt hours by 2030. The forces at work driving this increase in demand are population growth, emerging economies, increased utilization of technologies that rely on electricity, like data centers, for example, driving LLMs that are powering everything we're doing now, things like that. But what it does is it also creates potential for demand shock in the market, and if we cannot meet this growth in demand, there is some risk to the shock to the economy. And the things that are going to cause us missing on supporting the demand growth are going to be, well, what happens if there's a supply chain disruption? We experienced that through COVID. You can't get generation capacity built fast enough. The IRA is designed wrong, and they get the policy decisions wrong, and the outcome doesn't yield increased capacity on the system. Geopolitical conflicts put all sorts of things at risk, and of course inflation, and we all seen enough of that recently. So the addition of generation capacity on any electric system is hugely important, and there's a lot of risks associated with seeing it through. But also, the installation of generation capacity alone isn't enough to solve the problems in the economy, because I like to use this curve to illustrate what happens when you look at GDP per capita amongst some of the biggest economies in the world. And what you see is this downward sloping line, which is really, well, it's diminishing returns at play. And essentially every new megawatt of generation that is installed on a system yields less gross domestic product. It yields less output in an economy. So that leaves us in a position where we have to look to energy efficiency to take the kink out of the curve and maximize the utility from our resources, the dollars spent on adding generation to the stack. How do we create more energy efficient electric systems and improve the overall performance of our economy? Because really, that's what it all comes down to, is how are we thriving in a world of abundance and maximizing the benefit with the resources that we have available to us, right? And When I look at what's happening right now, Arcus in the last 3 years has worked with a number of major producers, manufacturers, big consumers of energy, from oil and gas all the way through to municipalities. And they've been faced with rising energy prices. They've had challenges with continuing their operations and protecting their profits. These are real challenges. You see them happening here in Texas too. And they're looking to solutions to manage their energy costs. And what Arcus has delivered are tools, predictive forecasting tools that leverage AI, deep learned models to inform them when they can take action to better manage their costs. This consumer set here is referred to as the prosumer. Everybody in here has heard the term the prosumer. Okay, so there's some notes, so great. But the prosumer are these customers that use energy cost management to participate in the market and manage their exposures. In the last 3 years, the prosumers have saved $250 million in Alberta. That's a province that has a peak system demand of about 10 gigawatts. It's roughly 7-8 times smaller than the state of Texas. Texas size, the opportunity and the value we can create in the state here alone, you're looking at $1 billion benefit, $1.5 billion benefit to the system. With something as simple as informing consumers with choices on when to consume power. So market volatility is a great incentivizer to the prosumer to tell them when they should take action and let them know when they should take action around how they consume energy. That's really the name of the game. And if they're given the right insights, they can participate in local energy markets and manage their consumption accordingly. And if they have some generation capacity, also participate in the grid in other ways. The prosumer today is now participating in energy markets through other programs like demand response. Demand response is a means by which the system operator informs them when to curtail part of their operation or some level of consumption, and they receive a payment for it. But there's also other opportunities for them to participate in the system, and we'll talk about that a bit more, but it really centers around the energy price management and other programs around peak demand. And just to look at it on the other side, there's the consumer, but then there's trading and utilities. And there's a great value to them too. A recent McKinsey report says that AI-based algorithms used in power market trading is a 4% improvement in profitability. From what I've seen from Arcus's models, they're better than that. And when you consider the ability to use technology to scale how you interact with markets using AI, you can magnify the potential as well. So that's a great thing to note. But then even on the utility side, when they're looking at how do you look at forecast model improvements and minimizing errors, AI-driven algorithms have been able to show improvements in minimizing forecast errors for things like solar forecasting, wind forecasting, etc. In 2021, there is some research that said that the investment in AI in energy markets was at $3.1 billion and was forecasted to grow up to, well, just shy of $15 billion by 2028. That was in 2021. But last November, for everybody who's following ChatGPT and saw this thing just blow up and hit the market, that company is now valued at $80 billion. And the rate of innovation in the AIs that are rolling out today blows this number out of the water. So I would take the over at 45 billion being invested in the market. So if anybody wants to return any information on where the current forecast for investment in AI in energy markets by 2028 is, and you want to bet me a coffee, I got the over at 45 billion. So so now I want to shift gears to looking at the industry here, and we look at these prosumers and utilizing virtual power plants to enable the participation in the market, and that's really sitting in the top part of the curve here, where they found a way to utilize their own behind the meter load resources, as well as maybe having some generation storage capabilities, charging. Like there's the pilot that's going on right now in the state right now with Tesla and the virtual power plant pilot. But what they need to interface with the grid is a really high level of technology and AI driven technologies to support the decision-making processes so that they can seamlessly and autonomously operate with power systems. Because the balancing act between your own consumption, generation, and planning for the future in coordination with the electric grid is a tricky balancing act, and it's not very well handled by Excel spreadsheets and a person sitting at a desk. So you really don't have a choice except to use some really sophisticated algorithm in developing systems going forward. And the utilities are faced with the challenge of ensuring that everything is in balance, so they need to have the right communications from these utilities. Again, it's a highly advanced technological problem to solve for. It's a mess. When you look at how power markets work, I want to just focus on the left side of the slide here for the time being. What surprised me when I wanted to just put together a diagram of how the energy markets interact from wholesale markets to consumer, and what I realized is that a lot of people get paid for the delivery of one electron, and there's a lot of people at work in that system. But really, what we're talking about here is looking at the prosumers, i.e. the customers on the bottom, and how they interface with the short-term power market using artificial intelligence and these advanced algorithms to understand at the top what day ahead and real-time energy prices are going to look like, how they can participate in ancillary services and capacity markets, and how does it relate to their own consumption behavior. So our current capabilities right now at Arcus gives them the opportunity to participate and bid into capacity markets directly with the ISOs. They have visibility into the wholesale markets and the energy markets. They can see when volatile power prices are about to occur, and they can take action. What's missing right now is the potential for them to tie into the energy markets and directly trade. I think there's a future state where that becomes a reality. But right now, that part is being handled by utilities and their origination groups who manage their wholesale power books and determine what price to sell energy to the consumers. And then what's left over is left to the energy markets to handle. So what is key in the slide really is how does the prosumer access the top part of the market so that they can seamlessly integrate and use AI to doing it. And the market has got to come some way to enable participation, especially around the short-term trading of it. But today, using technologies like Arcus and Forecast, they have the ability to see the market for what it is and manage their risks, which also shapes the discussions that they have with their utilities and gives them better insight into the decisions that need to be made, and they can better manage their costs. Right now, when you think about what utilities are doing in this market, they basically charge a per kilowatt, cent per kilowatt fee for delivery of power to the end user. They have a portfolio where they offer fixed block and floating blocks of energy, and then they also have other partners, or they themselves also provide demand response services to the market as well. The way that these contracts are shaped and formed and how they're given to consumers doesn't maximize their asset utilization, in the sense that if I'm buying a fixed block of power, I may not be able to participate in other sides of the market like demand response. And given my operational needs, I might not be making the most economic decision at the time. Each one of these parts in the market, the day ahead, real-time prices, ancillary services, peak demand, it should be up there. They're all commoditized in that they all move and change value on an hourly basis, you know, almost throughout the day. And if you are tied to a contract on one of those specific streams, you're prevented from participating in the other streams. So crucial to allowing the prosumer to accessing that top part of the market and driving more efficiencies is taking away those inefficient market mechanisms. You know, when we think about the evolution of virtual power plants, I think it's very much a bottom-up sort of evolution in energy markets. As take, for example, large commercial consumers of power. You know, some of the Fortune 500 companies right now, they have trading desks, they have energy management groups that are tasked with managing their exposure and their costs of doing business as it pertains to electricity consumption. And they're enabled by all the enabling technologies. They have trading platforms, they have market access, they trade on indexes, they have a market facilitator, they balance their systems, they use advanced analytics, they're traders, they have all of the heuristics and machine learned models and everything that you would need to manage a portfolio of that size. They manage their grid connection efficiently because they know how to shape their consumption behaviors and utilize storage or behind the fence generation, also to minimize their exposure to energy market prices from during high consuming periods of time. The market, you know, just from the left to the right, in terms of its complexity and investment cost, continues to increase. And as you move, you know, to more advanced microgrid systems, community microgrids, you probably, if anybody here follows the California ISO, you see a lot of advances happening in that market in community microgrids, and the need to have even well, full reliance or 100% capacity backed renewables. And then even further in terms of its complexity, investment costs, and also increasing in terms of its environmental and monetary benefits. You have fully independent microgrids that are essentially self-sufficient and still may maintain some form of a grid connection and can participate in the rest of the market. You know, when you look at these three types of grids, there's advantages to it, right? So, you know, the Fortune 500s and those large industrials right now, they're able to manage their price risks. They can use advanced analytics to continue to do that. Then when you look at these partially independent microgrids back to California, the Port of San Diego is an excellent example where they were able to reduce their energy costs by 50% from peak shaving around peak demand periods and high price volatility. All the way to the right, it gets very complex. VPP pilot programs that are fully autonomous are sort of that's nirvana. That's like a top-down driven model that is I think given the dynamics of the energy market and the ever-changing program and rate designs and the need for consumer choice is going to be a very difficult one to roll out. I think, and that's why I say bottom up is really crucial to how we address the challenges in energy efficiency and solving for these problems. But what let me see, where are we at on time here?
Yeah, and it's 15 minutes.
Okay, so when we look at its entirety, the utilization of AI-based technologies as we evolve prosumer choice really addresses that global challenge of how do we look at, you know, this massive energy consumption and solving for $500 billion in energy costs inefficiencies. This number also, I think, is a bit of a layup because I would argue that it's closer to $1 trillion when you start to look at all of the efficiencies that can be realized from just managing your own energy consumption more efficiently. So, with that, I'd like to conclude and just say that, you know, for the work that you're doing here, that your contribution to solving this $500 billion challenge is going to carry us a great way, and companies like Arcus are keen to work with people who want to solve for this problem. So thank you.
All right.
We have some time for Q&A.
The initial questions in the room. Yeah.
So distinguishing apart from prosumers, what about like individual consumers? How do they benefit from increased efficiencies? I mean, do you expect the price of their goods to go down? Like, what are the broader?
Right. So yeah, exactly. So energy cost as an input is the second highest line item on a balance sheet for any manufacturer, right? So yes, it is an inflation control measure, and efficient power systems should yield to less price volatility and a lower overall delivered cost for the end consumer.
So when you say that $500 billion is a layup, and then you say $1 trillion, it really, like, if it all gets kind of spread out, will be a lot bigger. The sort of net benefit.
Yes.
Yeah, so a question on, I guess maybe kind of on your last slide here, number for electricity efficiency.
Yeah.
Say more about what that number is or how you.
Yeah. So again, so why I say it's a layup is because that number really is just the difference between net production and net consumption. So it's almost like just looking at line losses across the system. So that number is already there. The other pieces to it are centered around energy efficiency measures in manufacturing and home consumption and how you commute to and from work, you know, all of it.
Okay.
Yeah.
How do you, I'll test another one here. So anyone online can ask a question as well. In terms of increasing efficiency, a lot of people would have termed the in the past utility death spiral from net metering and solar generation, and whether this just makes the price of power to the consumer or the price of electricity to the consumer go up if the utility has to cover fixed costs, and they're just going to increase the price if consumers buy less. Do you think about that or fear of something like that will happen from an efficiency standpoint, whether utilities or somehow the fixed costs will still creep into increasing the price to the consumer? Or no? I don't know.
It could result in some short-term price fluctuations. I think that what is the two things. One, if you just go and look at like the age of electric systems globally, the ones that are going to have the easiest time with the energy transition are the ones that have the oldest systems today and need to re-engineer and rebuild their systems. So they'll be very open to these technologies versus the previous way of doing things. And the other one that really comes to mind is what are the checks and balances on power system design economics today? You know, what are you know, is it appropriate for a transmission operator to be compensated on effectively a % per dollar spent on mile of transmission line? Are the systems being overbuilt right now because of that? So if you look at energy efficiency as a check against how these systems are built, there should be a clawback mechanism that exists potentially in place to say, you clearly overbuilt this system, your economics were appropriate, but the overdesign was not. So maybe that's a way of controlling the cost to the consumer ultimately when you look at how good energy efficiency can be.
Right.
Yeah,
So
it's a deep question.
yeah, okay, it's a tough question.
Yeah.
Yeah, question about how you structure your AI, and in particular, like some of the downside risks, like, you know, an analogy to like a flash crash or something in high frequency trading, like how do you hedge against such a thing? And also you mentioned heuristics. So in particular, you know, do you combine the heuristics with the AI so that you can constrain how big the AI can get relative to the heuristics?
So with heuristics and just the trial and error methodology of training, our data is really centered around reinforcement learning. So that's a method that we have for controlling, you know, model performance and what we're actually looking to solve for. Can you ask your first question?
The question is like, you know, there's downside risk that like,
Right.
hey, you know, we're gonna introduce AI into a system that if it goes haywire, we could have like a blackout or system crash or something. In the extreme case, but what do you see as the downsides?
That's one. Yeah, sure. Poor model performance, the model goes off the rails and it's hard to get it back to its previous performance. When we first started, we were running sort of like 11 neural network models, and now we're running hundreds. And we've had sort of instances where those models can do funny things, and we've had to go back and rebuild them. And when you're in the world of delivering real-time energy intelligence, it's like, well, how do you change a turbine out on a plane that's flying? So you need to have 4 turbines, right? So you need redundancy and you need parallel processing capabilities to really solve for those types of events. And you still need to have constant eyes on it because things do go wrong and there are model deviations. So we have detection processes in place to manage that. So when the model drifts and you see those poor performance measures start to show up, that there's an immediate plan of action to correct it.
Yeah. Question from online here. I'll just read it as it is. If you interpret, how do you control or monitor for insider trading without having access to all data used to train your AI models? Or I guess you could also discuss, does this open up, AI models open up more instances of insider trading in electricity markets? It's not clear to me.
I think this is a challenge for regulators to address fully, because the model development and the way that we build things, we have the potential to be transparent with our input data, to show anybody what beats these models and how they perform. And we can track where the data goes and who transacts on it and how it's being utilized. So in that way, you know, as an instrument of truth, it's probably easier to follow, you know, those processes and techniques than it is for where insider trading happens in the back room around, you know, over beers and people don't really know what's being said amongst traders. I think it's better for that, but at scale, AI, especially if it's rolled out in a top-down manner, does create all sorts of potential for insider trade, not insider trading, but potential for wash trades and maybe not deliberate market infractions occurring. That there is potential for that, absolutely. I think again, why bottom up and how we're approaching solving these challenges in the market is crucial, because, well, we don't have all the answers just yet.
Maybe I'll follow up something you made me think about with the software that you're working on. You see as not appropriate for like an independent system operator. like Erhardt or Cal ISO in the sense that maybe they have to stick with some more traditional optimization to plan for the market and calculate prices and ancillary services? I don't know, or is yours more applicable to just focus on end users? Is that a true statement at the moment? You're kind of focused on consumers of energy who might also have generation.
I think as like the ERCOT and other system operators want visibility into behind the meter assets, I think that they're gonna have to, and high fidelity, high frequency events, that, 5-minute settlement around energy, things like that, they're going to want to have increased, processing power and algorithms at play and how they solve for power flow modeling and what the grid looks like actually is a balanced grid from minute to minute. So
I guess from different question related to, of course, the most dramatic electricity event in my lifetime, of course, February 2021. How would you see your software potentially mitigating something like the impacts from that? Like, could your software help actually instigate rolling blackouts at a residential level across the state, for example, so that you actually could, even if there is a dramatic decrease in power generation, could you actually rotate across 10 million households?
yes, as a communication platform, the ability through our API to integrate with those assets and inform anybody at that nodal level what action to take, and even that there may be a rolling blackout happening and giving them an advance notice is entirely possible.
So you made the comparison of Alberta and Texas, and I'm just wondering what's the difference in like compute? How much more computational power do you need to scale up to a place like Texas from the place like Alberta?
A lot more. So it really does, like we operate as a hybrid on-prem and cloud architecture. And behind us right now, we are the owners of one of North America's largest power market databases containing deregulated power market data. So for students researching any power market, that's the energy stream, and I think you can have a license to that. But to answer your question fully, because we already have that data set, it's really focused on what are the neural network models that need to run on top of it, and that's what requires the additional compute. So it's not as extreme as you would imagine, I guess, given where we are today.
Here.
So it seems like there's just a lot of things that AI can solve. Like it's just going to address a lot of problems, right? But there's a lot of inefficiencies that are baked into these old systems, and it seems like you're going to hit a lot of walls with these old systems. Can you give some examples of how you expect AI will help to solve the old system inefficiencies?
Can you give me an example of one inefficiency? Because I just want to distinguish between if it's more on the
well, there's
industrial
let's
side
talk
or
about energy inefficiency. Like there's just a lot of inefficiency in our energy systems. I mean, lack of insulation, lots of larger or inefficiencies in how you create electricity. Like you burn energy, but you get 30% of the power from it. Will it help with those things?
Absolutely. So right now we are optimizing and providing insights for one of North America's largest. It's a vanadium flow battery paired with a PV solar array. And through our optimization engine, we make the determination on when that PV array should be going to charge the battery or should be exporting to the grid. And so as it relates to energy prices and participating in demand response to maximize its portfolio returns, it's also looking to solve for issues around its round trip efficiency and driving its own system efficiencies when it's trying to export the highest amount of energy to the grid. So there's an application for AI currently in how we're solving some of these challenges that probably would have seemed impossible 5 years ago.
Right, so something like that could help deal with, well, you were talking about potential transmission overbuild, and usually people talking about going more renewable are worried about not enough transmission, but dealing better with storage on site can help us minimize the amount of transmission, I guess, we might need for any given renewable penetration, so that's certainly
Nails the point.
highly relevant, yeah.
Thank you.
Yeah, right.
Yeah, I have a question on the prosumer side of things. So AI, like, but by itself is kind of energy consuming, and so are the data centers and hyperscale centers. Do you also use academic research institutes where they train models with checkpoints, or like crypto miners as your pro consumers? Because you can both use time-based load shifting and distributed or location-based load shifting to provide integrated with AI to provide services to them.
Did you say integrated AI to AI?
Yeah,
Yeah. So yeah, that co-optimization problem is a great one to solve for, right? Like, so if you have, and this goes back to even just like thinking about manufacturing some years back, and all of the major IoT and software providers were focused on predictive maintenance and that sort of management around that, and nobody was looking at the market side of the challenge and saying, well, yeah, we're solving for your CapEx and extending the life of your assets by looking at changing how you consume energy on that side and solving for vibration and things like that. But not realizing that if they could also align it with the dynamic nature of the electricity market, that they could minimize their operating costs as well. So that co-optimization problem is a great fit for AI, and we have a couple different applications where we're doing that now, and we're just continuing to see more and more of a challenge. Like crypto miners are an excellent use case because of the dynamic nature of their systems, and that they can shut off and on whenever their break-even economics tell them to do so. And so it's the ease of use, you know, in which these crypto miners can actually do that. It's almost, AI is almost not necessary because the complexity of the problem on their side isn't so great. But it is increasingly complex when you look at data centers and how do you manage use around microprocessors, and what can be done in terms of changing the energy profile and consumption around a microprocessor that leads to the grid. And that is an absolute fit for optimization, AI to AI problems. Does that answer your question? Okay, thanks. Great question.
Okay, oh yeah, we'll go with
Yeah, I think this is a very promising like future for the AI for power system. But on the infrastructure side, could you also comment on when would that be more ready to embrace this change? It's like you said, there might be a $500 billion to say the efficiency issue could use the AI technologies, but probably we'll also need to invest like $500 billion to change the current infrastructures to allow the change to happen. So you see when that our infrastructure might be ready to be ready for this change.
So yeah, okay, there's two parts in that question. The first is where are we at the current state and how we can solve for these inefficiencies. Like the $250 million in savings in Alberta in the last several years, like that's a real number, and those are all efficiencies that have been carved out of the market through just demand side management, essentially. And so what was necessary to make that happen, and even to see it happening in Texas today, is just having a deregulated market with price signals in place that enable the consumer to make those decisions. So in 24 plus deregulated markets around the world, that can already happen today. Just the technology and the insights are what's needed to see that through. To getting into the latter part, and how do inverter-based systems evolve and the infrastructure change to support that is the latter part. So I think there is, you know, when I look at the evolution of these virtual power plants and microgrids, there is that there is that level of capital investment, and that changes depending on the age of the grid and what costs have already been sunk, right? So you know, I don't know, like North Dakota might be ripe for the energy transition versus California. Like they might have a better grid in 10 years from now. Like, does that? Well, they'll follow California's example, you know, of course, it's a great example, but does that?
Right.
Great. Okay.
Well, yeah, I understand that your clients would be more like power market participants that would be willing to pay for the SaaS service, right? When they get the benefits on how to change things. But for example, for prosumers or like the residential clients, do you think it's a possibility, or do you think that they could in the future pay for some service like that? Or?
I think right now, some of our channel partners have, you know, technologies like microgrid technologies that they utilize Arcus's technology to deliver these solutions and aggregate it at the consumer level. So at some level, we're already supporting that side of the market. If you're a consumer, do you want to have the choice on when you turn your oven on and off, or do you want just to have lower cost of power? That's a great survey question, actually. Would you want to have your air conditioner shut off while you put your baby down for a nap in a heat event for a demand response, or do you want to have some sort of community-based aggregations?
Yeah, that's a great question. That's a great question.
I'll add a little bit more to air conditioning because I know what I want. Okay. Maybe the oven. I'm gonna have hungry people or slightly warmer people that are expecting it rather than expecting to be hungry, not be hungry themselves. They don't turn on the oven.
Yeah, there's limits, right? Yeah.
All right. Any other questions? All right. Well, I think we ended right there. So let's thank Dan Erhardt, Arcus Power, CEO of Arcus Power. Thank you very much.